assurance on liquidity is going to help transmission a bit. And I think the more important thing is that they don't see risks to inflation despite food prices going up. And I think the clarity on that we'll get in the month of July, and also I think so they probably will like to wait until July for taking this accommodative stance forward, which means another rate cut. Unless there is any adverse development on that front, I think we should see rate cuts happening. I think we are right now penciling in another 25 basis points for this calendar year. So clearly, I think the monetary policy becoming more and more growth supportive, and the consensus in the MPC also indicates that growth has now become a greater concern, and the output gap is also pointing towards accommodative stance right now.
The time has come wherein either the committee decides on something that this is the rate and overnight money would be available unlimited at that rate, or at a point of time it should not be swinging between a deficit of 1.5 lakh crores to a surplus of 1.5 lakh crores. Somewhere mid path is required, wherein when he says a durable liquidity should be available to the system at all points of time. We cannot be subjected to vagaries of international markets or whatever, depending on what economic conditions prevail in India.
Well, I don't think so the immediate policy has much impact for banks. I think this statement, if you read through, is an acknowledgement from the central bank that growth has slowed down significantly and the economy does need stimulus for growth to revive. I think the central bank has done its part in terms of doing the rate cuts. Bear in mind, this is the third successive rate cut that we have got, and now with repo rate at 5.75, meaning the last time repo rates were below 6%, it was in 2010. So it's now after a gap of almost 9 years that we've got repo below 5.75. So I think the central bank has done its part in terms of doing what it could have done, and now it's left over to the central government. We have a budget coming in where I think the government will have to do some heavy lifting in terms of some concrete policy measures and concrete actions to revive growth in the economy.
With change in stance, it further suggests that it could, the rate cuts may continue and there would be a supply of liquidity as well, because if the stance is accommodative, you can't have the tightness on the liquidity side. We have seen more than 3 trillion rupees of liquidity had been injected in the previous financial year through OMO purchases, and these are continuing in this financial year as well.